Good afternoon, this is Paul Harris at Kitco News at the PDAC conference in Toronto, the world's largest exploration event. I'm joined this morning by Mark Ferguson, Director of Metals and Mining Research at S&P Global Market Intelligence. Good afternoon, Mark.
Hi, Paul. Thank you.
You've just put out, just before the event, your world exploration trends, yes. And there's it makes very interesting reading. Last year, global exploration budgets are down 3%. Why do you think that is?
There were a lot of different factors that impacted exploration budgets last year. I'll start with looking at really late 2018. There was a lot of difficulty in the equity markets to raise money from November through to February of 2019. That really parlayed into lower budgets by the junior companies. They just struggled to raise capital to fund their exploration efforts. And if we look at the differences by commodity, gold really struggled last year. A lot of that was because the gold price improvement didn't happen until mid-year, and as a result, a lot of companies weren't able to capitalize on that price to go out and tap into the markets. But it does forebode a relatively strong 2020. The other thing that impacted gold budgets last year was really M&A activity. So when Newmont and Goldcorp merged, when Randgold and Barrick merged, the resulting company ended up spending a lot less than the preceding companies.
Your report encompasses different metals, different geographies, different stages of companies. I think some of the noticeable trends that the report picked up on, there are big dips in exploration spend in Mexico and here in Canada, but conversely, pretty significant increases in Australia, the US and Chile. Why do you think there's that geographic change?
Yeah, I mean, for Canada, budgets declined by about 9% in 2019, and a lot of that was driven by lower budgets for gold by juniors and majors. And the majors, to a certain extent, it's because of the mergers that we mentioned, some of the exploration that Barrick or Newmont or more specifically Goldcorp would have invested in Canada, they fell off the table to a certain extent. And again, it was the equity financing efforts by juniors. They really struggled early on in the year when they're sort of working through trying to create momentum fiscally to do that exploration. And so they certainly struggled early on in the year. Now, as the year progressed, we saw a market change in the markets for the juniors, on the gold side at the very least. And so it really pushed drilling results in Canada to rise late in the year and at the beginning of this year. Mexico is another country that saw a sharp pullback, and that was really driven by a diversity of commodities. And some of the majors really pulled back on budgets. Fresnillo's budget fell, Teck Resources' budget fell for the country, and Southern Copper as well.
I'd imagine the decline or the dip in exploration spend in Canada is particularly surprising, given that Canada has the flow-through funding mechanism, which enables companies to raise at 30-40% premium, less dilution. It's an advantage that pretty much no other country has.
It is an advantage. Certainly Australia has been trying to do similar types of things over the past few years, and they've been trying to change their policies towards that. But I think, overriding that extra influence that flow-through shares would give to Canada is when there is volatility in the marketplace, investors are just holding on to their capital a little bit longer and therefore not willing to go out on sort of a more risky limb to invest in juniors, even if they are getting that tax break down the road. So.
In Australia, the gold price in Australian dollars is record high, so I imagine that's given the Australian companies a heavy war chest to actually deploy in the ground, which is why in Australia, exploration has ticked up.
To a certain extent, for sure. That we did see an uptick in copper exploration budgets in Australia as well, and I think that kind of speaks to some of the major discoveries that have been made in recent years by BHP and Rio Tinto. So there's certainly additional investment going into that country for that reason. So.
Okay, well, one of the other sort of trends the report picked up on is that allocations to gold fell by quite a bit, almost $600 million, while copper has increased, but still copper's coming off a very low base.
It absolutely is, and that uptick in copper budgets last year did catch us a bit by surprise, but when you think about some of the bigger discoveries that have been made in recent years and companies investing in them, be it Winu by Rio Tinto in Western Australia, another discovery by BHP also in Western Australia, but also Ecuador has had a strong year, with Sol Gold's project having additional exploration devoted to it. So there was definitely room for growth in the copper budgets. And if we think about the copper supply pipeline, it's been relatively weak in recent years. So there's definitely a need for investment, and it's really challenging in the current environment to foresee how 2020 is going to shape up.
So. The report picks up on, looks at discovery rates, and they're pretty anemic, and I guess part of that is because a lot of the exploration is being done by majors and it's brownfield exploration. But the discovery, the pure discoveries, they're not happening.
That's right. Certainly it's a long-term trend that we have been seeing where all companies, whether it's majors or juniors, have been really looking at either late-stage assets or brownfields assets. And so over time, that's going to obviously lead to a decline in the number of major discoveries or even the smaller deposits that are being made. When we did a little bit of research on the total reserve and resource endowment for gold and copper, we have seen growth in that over the past 5 years. And that is going to reflect a lot of investment that's going into those brownfields camps to expand known reserves or identify new resources or identify new satellites that can feed into those existing operations. So.
Okay, we're here at the PDAC, a new year starting, we're in the first quarter. How do you think this year will play out in terms of drilling and exploration spend?
It's definitely an interesting year to contrast to 2019. And I say that because last year gold budgets fell, copper budgets did very well. But with everything that has happened so far this year, with coronavirus, with the markets in a lot of turmoil, gold price has certainly done much better than many other commodities. We're expecting almost a flip in terms of budgets for this year. So we're expecting, reasonably strong growth on the gold budgets. But on the flip side, a lot of base metals, industrial metals, they're going to struggle to raise capital, to commit to doing that exploration. So it's really a challenge to say where that balance is, but budgets are kind of expected to be flat at the moment. Gold much higher, but others offsetting that increase.
I suppose part of that will depend upon what happens with the coronavirus outbreak. Will it be contained? Will it not be contained?
Absolutely. There's a lot of timing issues too, right? Sort of how the gold price spike that happened mid-year last year didn't really parlay into gold budgets for 2019, but are going to impact things this year. How long the coronavirus, how many countries it impacts, could also certainly impact the exploration sector, let alone mine production as well. So.
Okay, excellent. Well, thank you very much for joining us this afternoon, Mark.
Thank you very much.
And thank you for watching. Stay tuned on Kitco.com for more from the PDAC in Toronto.